What's up everyone? In this video I'll show you the finest trading indicators for day trading that are compatible with forex, cryptocurrencies, and stock options that got my account from $100 to over $1,000.
Okay, so you're going to start by visiting tradingview.com.
Therefore, we will set up two indicators. But first, we'll do this over a period of 15 minutes, and you'll be utilizing Heiken Ashi candles. Alright? Click on the indicator after you've adjusted your candles and set the time frame. This one is referred to be the extreme trend from Jyoti, also a very small percentage. Not many people are aware of this one. We're going to tweak a few things here. I'm going to start by removing the shapes. You don't want that. As for the lines, I'm going to change the blue lines that are supposed to be bullish to green and the yellow lines that are supposed to be bearish to red. Before clicking, I'm doing this because a portion of the technique calls for utilizing red candles, a red histogram, and a red line. Since the extreme trend has been established, we will now add another indicator. The QQE threshold will be the first one we add. Alright? The Jose 5770 version. Also, take a look at how low that number is. This shows how few people are aware of this one. That will be added, and the parameters will be adjusted as well, okay? So move over here, click on this tiny setting icon, and then select Settings. The first action we'll take is to input data, then the RSI length will be reduced from 14 to 3. Alright? As we move along, we'll uncheck a few items in the style section. Since we don't need those, we'll uncheck these two lines for the plots and levels. We'll also deselect the H-line background. Now that you're finished, this is what it will look like. Let's keep the color of the bar, shall we? Okay, so what precisely is the plan? I'm going to demonstrate it to you guys for this example on the 15-minute time chart for Bitcoin. This is perfect for day trading, right? The first need is that the price must be above this X trend. The second requirement is that the green bar in the QQE histogram must be located directly here. Number 3, the Heiken Ashi candle's bar color must be green. That will be your trigger candle if all of those fulfill the requirements. You will place your trade on this particular candle. So those will be the tactics, or at the very least their guidelines. Where will you now place the take profit and stop loss orders for these? Because of this, I prefer to set the stop loss in this instance slightly below the most recent swing low. You will make money when the QQE histogram displays a red bar. I'll demonstrate the short position technique for you guys, which is going to be completely the opposite. I'll give you some examples after that. This is fantastic since you can view both of these together on this same chart. In order to execute a short trade, the price must be below the X trend, there must be a red bar in the QQE histogram, and the Heiken Ashi candle's bar color must be red rather than yellow. You will earn profits if the QQE histogram is green and the stop loss is above the most recent swing high. Next, I'm going to give you guys some examples. However, before we do that, if you guys found this article helpful, please click the like button and put berries in the comments section. And while you're at it, don't forget to hit the bell on my YouTube channel and subscribe so you don't miss any upcoming videos that will help you become a more successful trader. Okay, now let's have a look at some samples. This is a fantastic short example, and it's a good illustration of a buy. As a result, if you were to take a short position right now, this is where you would enter since this is where everything lines up. You should wait for that candle to close, then, as this is a short strategy, you can position the stop loss just above the recent high swing. You'll continue traveling in a straight line until the QQE histogram bar turns green. So, why don't we take this all the way up to this point? The risk-reward ratio would have been the place to find something like this. It would have been 1 to 7.07 times the risk amount in a situation like this. Because everything is green, you would enter on a long position right here. There is the entry right here, and this would be the trigger. Price movement for the X trend is above the green line, and the candle is green. Also, there's a green histogram just below the most recent swing low, which is located here. You should set your stop loss. When it turns red, you exit this trade. That trade is still profitable despite the dangerous risk-to-reward ratio of 1 to 2. Here's one more. Given that the price action is immediately above it, this candle would be the trigger candle. Additionally, wait till after this candle is burned down if you want to be extra safe, since the price movement is currently actually above the X trend. So if you performed it exactly here, you would have gotten it exactly here, correct? And you would continue until this candle, exactly where the QQE would go, displayed a red bar. Because this is the most recent swing low, wouldn't the most recent swing low be right here as a stop loss? Therefore, you might even give it a little more breathing room, right? Even so, the restored ratio is currently 1.56 to 1. That is absurd. Let's turn around right now and look for any further opportunities. Okay, let me show you something. Price movement is higher than the X trend, and the trigger candle would be this one. You'd start your trade exactly here, aren't you? And place it directly beneath the swing low, in the center of the swing low, right? You could simply do that. And until this candle, you would keep this trade open. Therefore, even if you receive that, the deal is still beneficial because the ratio is practically profitable. Therefore, it is a high probability trade situation with this specific strategy, right? If you continue to let it run, some of the profits can mount up to quite a bunch and the stop loss orders are rather small, so if they are hit, it won't be much. But even with successful trading, a small profit is still preferable to a loss, right? Therefore, it's still beneficial even if you occasionally make a small profit. I now realize your perspective. There isn't a perfect signal out there, but I assure you that these ones are pretty similar, as I have shown you. If you want to up your day trading game, don't miss these videos on day trading tactics. Once more, there is no financial advice in this video. Everything is merely provided for information. Additionally, don't forget to subscribe for more trading stuff. See you later.